going to.
Hey, good afternoon, everybody. Tom Stewart here. This is Smart Business Moves. Liz isn't going to be able to make it today. I think she had too much fun in Vegas last week and she's still recovering. But our guest today is Dan Platta with Blue Skies. Hey, Dan, how are you today?
I'm doing awesome. Thanks, Tom. Sorry that Liz can't be here, but I know what you mean. Vegas can have that effect on people. So maybe it was good that I didn't make it to Vegas last week. Otherwise,
Yeah,
it would have damn show to
the stories you'll never hear.
Some of them still make it back. Some of them still make it back.
It was an awesome time for those of you who were there. I know you know what I mean, and for those of you who weren't, it was the first time from a ARCSI standpoint that we've been able to do that in the last couple of years. We got had to do a virtual event, I guess, last year, which is better than nothing, but far cry from being able to get together. Under the circumstances, we had a decent turnout. Not one of the most heavily populated shows. I guess COVID's still kind of a thing out there, but had a lot of good education. You had your man Sean Day out there, Dan, and he was taking care of business.
Yeah, he's talking about employee stuff. Sean and I were out at a show called The Experience, which is for restoration and carpet cleaning companies out in Vegas a couple months ago, and kind of same thing. It was like half staff. It was 50% of the usual turnout. So I think that's kind of the vibe here for a minute while everybody figures out what the heck's going on with COVID still.
But they're getting it wound up in 2022. They're going to be doing it in Chicago. They're going to be doing it earlier. Like I think it's the first week in October. So, more information will be coming out about that. But I would hope by then that everything would feel more normal and it would be a well-attended event.
That'll be good for me because, like you and I were talking earlier before we went live, they always have it right in early November, which also coincides with the deer hunting rut. And so in early November, I block off my schedule to go chase whitetails around the woods. So maybe if it's October 1st, I can still, sneak out and join the fun.
Yeah, absolutely. You need to, hey, Denit's with us today. Dan, I don't know if I didn't point out, but if you look over on the right-hand side, you've got some controls and one says comments.
Comments.
We're streaming on like several different Facebook pages and some YouTube channels. And whenever anybody jumps in with a comment, you'll see it there. Hey, Linda, how are you doing today?
There we go.
For you folks who are just joining us, Liz is taking the day off. We're joking that she's recovering from her trip to Vegas. But anyway, she'll be back with us next Monday. Dan, your world within Blue Skies is, I know that you wear a lot of hats. You're the CEO, so ultimately, you're responsible for everything. But you're
forced into all the hats,
isn't it?
Yeah. I'm a weird accounting nerd, and you wouldn't know it by looking at me or listening to me. But I graduated college with accounting, finance, and econ degrees, and my strategy was if I know how to manage money, that'll probably help me make more money. And at the time, money seemed like an important thing to be made coming out of college. So I did accounting and finance in the corporate world for just shy of a decade and steered it more towards finance. I kind of, when you're in college, you just get this like liberal arts education, but they don't actually tell you how it applies to anything. And so I got into the real world, and then I kind of realized like, okay, economics is all theory, accounting is all like data prep, and then finance is making decisions with the data. And I was like, man, like that finance piece of it, that's really sexy to me, because decisions are what makes the money. I want to make the money. So I started my career in accounting in the corporate world, and then shortly thereafter, like I said, realized like, oh crap, like I don't actually get to make any decisions. I'm behind the scenes of everything. So I steered my career towards finance, and I started doing what I was at Cargill, which is a big private agriculture company. I think like up there with the largest privately held companies in the world. Usually it's them and Koch Industries, like trading places. And I did what we deemed risk management, which was really what I deemed slinging chicken feed. So we had brought eggs in tankers, And those eggs came from chickens, and those chickens ate corn, soybean meal, and then some other stuff. And my job was to trade futures and options contracts to try to hedge the price of the egg. You know, we had like a mathematical formula devised with all the farmers. And so my suppliers were farmers in Wisconsin and Minnesota and Iowa and Illinois and Indiana. And my customers were McDonald's and Denny's and IHOP. So it was kind of fun. I got to go out into the middle of nowhere and visit, some really like blue collar farmers. And then the next day I'd be in Chicago at McDonald's corporate headquarters talking to their treasury department, like talking about options contracts to try to keep the dollar burrito $1 on the dollar menu, which like, I'm not trying to say anything about my replacement because he's a good guy. But the minute I left, that dollar burrito was no longer $1. And man, that was like my go-to. That was my go-to.
So you know who to blame for that. You don't want to call him out by name though, because
I'm not going to give you his info. Because he is a nice guy.
You'll blow him up on Twitter if his name gets out.
That's right. But yeah, so like there was a point in time where I was like, I'm pushing. At the time, I was pushing 30 years old, and I was like, well, if I'm going to do something entrepreneurial, I feel like I should do it sooner rather than later. So if I suck at it or I don't like it, I can like get back into the corporate world and have a real job again. Yeah. And so that was back in 2016. I joined Blue Skies, and I had already been kind of moonlighting with Blue Skies behind the scenes. So from 2010, when we got our start, 2011, we bought our first window cleaning business. 2015, we bought our first home cleaning business. And somewhere around like 2012, 2013, I had jumped in and I started and I didn't realize this at the time, but it kind of sets the tone for the bookkeeping we do now. But when I first started with Blue Skies, and Mike Dalkey, who's my business partner, he was a buddy of mine. He was my financial advisor, actually, before he left that world and started buying small businesses. And what I helped him with was setting up the books and figuring out how to measure ourselves to get data that we could make decisions with. And so we spent many a night at Starbucks, to our wife's dismay, getting all hopped up on coffee at 10 o'clock, working on spreadsheets to try to figure out the business model.
Starbucks.
Actually, it's funny you call that
behind you there. I'm just,
It's funny you call that out because it was actually Caribou Coffee, but I never say Caribou because it's like a regional coffee chain. Like some people would know who Caribou is, but I say Starbucks because everybody would know who Starbucks is, but it wasn't Starbucks. So you caught me. It was Caribou. We lived like 2 miles apart, and it was a mile from each of us. So I didn't realize it, like I said, at the time, but that was like what got me really interested in small business was the business model and figuring out how to have it make money and have it make money consistently and protected. So there wasn't a lot of risk on the table. And so that started back in like 2011, 2012, where I started helping with that. And eventually my life got into a position where it was an easy, justifiable time for me to leave the corporate world and have more fun doing this sort of stuff. So back in 2016, I kind of replaced him at Blue Skies so he could go do more investing related stuff, which is what he was really passionate about. And then I could, bail out of the corporate world and do more operations related stuff. And we're still running these cleaning businesses. So we still have 3 home cleaning businesses. We've had more, but we've bought and sold some as we go. And we have a couple window cleaning businesses as well. Again, we've had some others, but we've bought and sold as we've gone. And really it was back in 2018 that we started getting tapped. And actually, it wasn't our original idea or our original intent, but we had friends of ours in the industry that had said, hey, you guys must hire a lot of people. Can you hire some for me? And we're like, well, I guess so. And at about the same time, it's like, how do you guys do all your books? Like, your businesses are so weird and complicated. Like, how do you keep track of that all? It's like, well, we just here's how we built it out and, blah, blah, blah. And they're like, well, can you jump into my QuickBooks and do that? Or it's like, well, I guess so. So that was the impetus for, we already had this admin company, this Blue Skies admin service company that we have existed at the time, but it was only internally facing. So we did the accounting, the bookkeeping, the marketing, the recruiting for internal companies, and we would bill them. They would pay us like they were an external client, but we just never thought about serving external clients until external clients were like, dudes, you guys built this thing. And Tom, probably a little bit similar to you, which is like, you're building this thing because nobody's got a solution for, the CRM that you want. And so you start building it, and eventually somebody sees it and is like, damn, that thing is cool. I mean, I remember coming down to visit you and looking at Made Central and being like, yeah, that does like everything that you would want a thing to do to run your business. And so it was kind of the same draw, and we started building all these tools, and eventually somebody else asked us to do it for them. And now here we are.
Yeah. Before you know it, you're in a whole nother business. And that was never really the initial plan. It just kind of happened.
Mm-hmm, mm-hmm.
But now that you're
I will
here,
say, oh, go ahead.
No, you go ahead, Dan.
I was gonna say, I will say, and like I said, I didn't realize it at the time, but this is my I love the entrepreneurial world and small business world, but doing the bookkeeping for other business owners is the most fun I've had. And it brought me back to when I used to help Mike sitting in the Caribou Coffee, like with his business model. I get to do that again, except now I get to do it for a couple hundred bookkeeping clients, and hopefully, a couple thousand sooner rather than later, to kind of share best practices and share what we know, and hopefully I talked earlier about, I view myself as more of a finance person than an accountant. And I'm trying to help business owners understand that bookkeeping isn't an accounting activity. It helps accounting, like it helps your CPA do the taxes at the end of the year. They love it if you do good bookkeeping, but your accountant can do your taxes with bank statements. They don't need a QuickBooks account. They might tell you they need it because they really don't want you to show up with a box full of receipts and bank statements and have to do your taxes with it.
And they might charge you a little bit more if you do.
Yep. And so, but that's not the reason why we do bookkeeping. Is like, yeah, it saves some money and it makes your CPA's life easier. But bookkeeping, the way we do it, it's truly a finance activity. It's truly designed to make decisions. It's not just about putting some data into a thing to have an end result. The end result is in our control. It's the decisions we make every day about how we run our business. And so, like I said, I didn't realize it when I was doing it for Dalkey back in the day, that's my favorite thing to do, is to help those business owners. And at the time it was helping him, and now it's helping a couple hundred other clients run their businesces. But I think that's where the beauty of it is.
And what you're describing is something that, at least my experience, having, done a lot of, training and coaching over the years, as well as working with Made Central users, is a lot of people have CPAs, and I'm sure they do a wonderful job of filing their taxes, but there really isn't any business accounting associated with that. They'll get like, not to get too geeky, but you'll get like a P&L statement that doesn't even break out your cost of goods sold. It's just, here are all your expenses. And for taxes, that works fine. But if you're trying to run a business, it's not worth the paper it's printed on.
Yeah, and it confuses you into thinking a P&L is something for tax purposes. Like it's not organized in a way to help you make decisions. It's not timely in a way that helps you make decisions. I always laugh when they're like, yeah, I've got a bookkeeper. Like every quarter I get something, and I'm just like, man, you wait for a whole quarter to know how you're doing? Like,
how do you get it like in the middle of the following quarter even? So.
Yep. But I get it. Like a CPA, I like to break accounting down into 3 groups of activities that all get called accounting, but have totally different purposes. So step 1, I like to call mother-in-law work. And I say that as a like endearing term, because it's actually Mike, my business partner's mother-in-law, that does this for us, and she crushes it. And I could never do this. And we don't do this in our business either, but accounts receivable, accounts payable, and payroll. It always gets called accounting, but there's no actual accounting. There's no debits. There's no credits. Nobody needs an accounting degree to do it. You just need to like have the software and follow a process. But anybody can send an invoice and make a phone call to collect on the AR. Anybody can go online and pay a bill or whatever the case is. Anybody can jump onto Gusto, enter hours, enter commission reports or whatever is, and hit the button to execute payroll. You don't need to have any accounting experience to do those things. You just need to be super reliable, super consistent, and timely with it. So that's bucket number 1. I like to call it mother-in-law work. They're dynamite at it. I'm going to skip bucket number 2 because that's where we fit in. Bucket number 3 is your CPA, and they're tax experts, and they're great at the tactical end of that. Some of them can get a little bit strategic with it, but most of them don't understand the home service industry. And so kind of like you pointed out, even if they ran a P&L for you, it's not going to be organized in a way that actually helps you understand your business. It's like, yep, here's your revenue and here's all your expenses and here's how much money you made. So they're really good at the tax side of things. And again, I kind of view that as a tactical thing, which is it's the end result. It's minimizing your liability, but it's not helping you make decisions to make more money. It's helping you. It's them kind of making the decision to help you lose less money to the government. And there's some things you can do throughout the year, but most of the things you do throughout the year should increase your tax liability. Like, by all means, you want to be making more money, not less money. And then you want to figure out how to pay the least amount of taxes on it. But they're great at that. I was actually on a call today with the client that we're just starting with and his CPA, and the CPA was just like, just for the love of God, keep me out of all these day-to-day things. Like, I don't want anything to do with the books. I don't want to have to tell like where this thing goes and what that thing is and make this journal entry. Like, somebody do all the bookkeeping throughout the year so I can do my thing once the year's wrapped up and you guys have this thing reconciled. But like, CPAs generally don't like to mess with that stuff. It's too in the weeds. It's too much about running the business. And they're not business people, they're CPAs. So they don't want to worry about how you're paying your labor and what your acquisition cost on your marketing is and things that you and I would be thinking, like, as a business owner, I got to know what these numbers are to run my business. They're just like, yeah, I just need to know what your net income is and make sure you've got these different buckets captured that maybe have a different tax impact so I can do my job. So that's where we ended up fitting in. Is we're not CPAs, although we do have somebody on our staff that's a CPA. So at some point, I think we'll be able to do people's taxes. We're kind of having her take some classes so we can get into that world too. But today we don't do that. We don't do the AR, the AP, the payroll, because it's just always better and faster and easier done in-house by somebody that's there, preferably a mother-in-law in my experience, because they're so good at it. But we fit in between, which is bookkeeping. And like I said, it's more of a finance activity in that we're categorizing transactions. We're still reconciling accounts and stuff like that, but we're grouping things in the way that we as home service business owners make decisions. And so if we can help a business owner understand what their cost of goods sold is and what that means and who to hold accountable with it, or what their marketing spend is as a percent of their revenue and what their acquisition cost is, or what their administrative overhead is and what that drag looks like versus this versus that, and what it looks like over time and what it looks like over the best companies in the industry, all of a sudden they're just that much more powerful of a business owner to make trade-off based decisions about where their money's best invested. And we do so we do that. But I've also found that, again, a big piece of it is timeliness. So we do it weekly instead of monthly or quarterly or, however often a CPA would do it. By doing it weekly, not only is everything in the right spot and grouped in a way that helps them run their business better, but they have data every single week instead of waiting for the end of the month or the end of the quarter or whatever it is. So sorry for my rant. I'm passionate about it.
No, that's awesome. And you're filling a need. I see that. The other part of the equation, I'm kind of curious how you guys plug into this is, I've got the data that I need, but a lot of times, the cleaning business owners don't really understand what it's telling them or what actions to take.
Mm-hmm.
I've heard this described in some circles as like a virtual CFO. Do you guys do any coaching, any feedback, any action plan based on what your financials are telling us? These are some steps you might want to take.
Yeah. So every month we send a P&L report out, and I try to one page it. I don't want somebody to have to look at an entire P&L report, because even I'm an accounting nerd, and even if you send me a P&L with revenue, 40 different line items of expenses, and then net income,
that's inhumane. That's not right.
Yeah. So I'm even gonna just look at the top, look at the bottom, and then the rest.
And I'm paying for this. I can be miserable without you.
Yeah, exactly. What's this list of numbers you just sent me? So we group it into 5 different categories of expenses, and when we send out a P&L report, we just show those 5. We have all the details below, but I just tell people don't look at the details unless something is off of your business model. So we send it every month. It shows all of the months individually, but then it also shows the year-to-date total, so they can kind of see how are they trending, how are they doing for the entire year so far. And like I said, it's the 5 different types of decisions we make in the categories of expenses. So we talked about cost of goods sold already. That's going to be anything that's production related. So it's going to be the labor, it's going to be the supplies that they're using, it's going to be damages and repairs, anything that's like happening out in the field. We want to call cost of goods sold because it's part of delivering the job to Mrs. Jones. There's always like some gray area ones in there. Workers' comp we put in there because safety happens in the field. Merchant processing we put in there because we have to decide if we want a check from them or, like getting paid as part of the job. We either have to pay somebody to run checks around, which is usually our production manager who falls into cost of goods sold, or we got to pay a credit card company and we got to pay an employee to put their information into the system. So production related decisions, we're generally holding a production manager or operations manager accountable for that. And so we isolate that as a specific set of decisions and a person to hold accountable. We have marketing for all of our client acquisition related decisions. So whether it's the ad spend, who we're paying to run the ads, our software costs, our website, not all software, but like marketing specific software, lead flow based software like Responsibid or something like that. That's online pricing tool. So we group marketing as, what's our client acquisition decision set looking like. We have administrative overhead for what our people infrastructure decisions are. That would be people like you and I that are in the office, not out at cleaning stuff. It's bookkeepers, it's lawyers, it's your office manager, your virtual assistant, a salesperson, anybody that's not out cleaning stuff goes into that administrative overhead. And I see that bucket tends to get way out of line as people scale. And so I love having that as a specific breakout where it's like when we send that P&L, it's red, yellow, or green. Like you shouldn't spend more than X on that category. And if you start getting high on that category, the only way to get it back down is you either got to fire somebody or they need to grow your revenue, which is why you hired them in the first place, is they got to go add some value and grow your revenue. So that's a super meaningful bucket to measure that people infrastructure. The fourth one is fixed overhead. So that's like your non-people infrastructure. That is your rent, utilities, software like Made Central would be. What else do we put in there? Liability insurance, all the fixed monthly bills that whether you do twice as much revenue next month or half as much revenue next month, those bills are still going to stay the same. They are your infrastructure. And again, if you're high on that, you either need to cut expenses or grow revenue. There's not a whole lot of trade-offs. And the last bucket is your variable overhead. So fixed overhead, like I said, is all your non-people infrastructure. It tends to be proactive stuff where you sign up for something and you pay a monthly bill. Variable overhead is not proactive. It's all reactive stuff. It's stuff like employee engagement, recruiting, repairs and maintenance, meals and entertainment, events and education, where generally either something goes wrong and you got to pay to fix it, or an opportunity presents itself and you got to pay to pursue it. But it's more like frugality-based decisions of you're not signing up for something for the long term. You're just signing up for this thing this one time. And are you going to go? And what hotel are you going to stay in? And stuff like that. So it's more frugality-based stuff. So when we send a P&L to our clients, it's those 5 categories. And then each month, each of those categories is graded red, yellow, green based on the business model. And we do it for all sorts of different industries, but we have a home cleaning specific target for each one of those. And each month you're either red, yellow, or green. Are you spending too much on your cost of goods sold? Are you close or are you beating it? And not all months are created equal. I like to look at March from this last year was a good example. March and April back to back. March had 23 business days and only 4 payrolls for those of us that pay weekly. So you have 3 extra days of making money. Like everybody was all green on everything. And then the next month, April, I think had 21 business days and 5 payrolls. So everybody was all red on everything. And I'm like, right. It's okay. Like not all months are created equal. They have different numbers of days in them. I mean, that's a 10% shift in revenue just from 2 extra days, right? It doesn't feel like a whole lot, but 2 days is a whole lot of revenue in a home cleaning business that's built on recurring services. So we always kind of point back to that year-end total of, yeah, you're going to have some ups and downs in any given month with seasonality or just anomalies of different months like that. But we can always see how we're trending year to date. And that's going to point us to the areas that are maybe red on that P&L where it says, here's a thing to address in your business. And then let's dig into the details of that. But if my cost of goods sold is 58% with all my labor, all my supplies, all my workers' comp, damages and repairs, if my cost of goods sold is 58% in a home cleaning business, I'm just going to move on. I'm not going to, there's not a problem there to be solved. I might be losing money in my business, but it's not there. It might be in the admin line. Maybe I just hired too many people to go out and do sales, or my phone team is inefficient or something like that, or my marketing isn't converting right. So this can help point us to where the problems are in our business. So I like to use the term, we're not trying to boil the whole ocean. When we look at our P&L, we don't need to solve all the problems. We just need to solve the worst ones. Solve the ones that incrementally will make the most difference. And so it's a little easier when you just have to look at 5 line items instead of 40. So we'd like to take that approach.
So the red, yellow, green approach, do you have your own benchmarks that you use for that?
Yep. So we kind of look at all of our clients in specific industries, and then we can devise what is kind of, I won't say we shoot for industry best. We just shoot for industry sustainable. So some geographies can get better margins than others, obviously. But everybody can hit in home cleaning like a 10% net profit margin would be a good, healthy profit margin, assuming the owner is taking a paycheck and they are an expense of the business too, not just taking distributions. Window cleaning, we shoot for more like 15, and power washing even shoots for 20. So different industries will have different net income targets. But then the spend in each category, again, we just have so many clients, we have so much data that we can see what the upper echelon of companies are doing and say, here's what we want to be shooting for in that category to be running a sustainable, successful business model.
So, you guys have been doing this for a while, and I guess observation, setting here post-COVID, or I'll say it's post-COVID. I guess it's still kind of COVID, but
late COVID.
Compared to say, 2 years ago, and the years preceding that, everything was just kind of constant. Whatever you were paying for labor was kind of, the same year after year, maybe a little bit, but, no big changes there. This whole concept of inflation was relatively a non-issue. Here recently, though, last year and a half, I talked to a lot of businesses that they're paying 50% more for their line labor than they did a year and a half ago. All, a lot of the other inputs, expenses for their businesses have gone up a lot. So, speak a little bit about, what maybe worked in 2019 and 2018 and 2017. A lot of people were running their businesses using checkbook accounting, if you will. And as long as, you might even stumble across and just kind of get lucky, but you've got a recipe and a mix that it's working. As long as nothing else changes, you're going to be good. But sitting here 2021 with 6.2% inflation on its way to 7%, and who knows what we're going to be paying for labor a year from now. How does that make the work that you're doing even more important?
So there's 2 pieces of that. One is labor is the biggest piece, right? I think like costs of materials and stuff like that are going up, but labor is going up the most. To get high, like labor's hard to find right now. And I know Sean talked about that when he was down in Vegas at ISSA and ARCSI, but labor's really hard to find to begin with. And the labor to that we need to pay to go have somebody go clean is getting more expensive faster and faster and faster. So combine that with the fact that like 60% of our expense in a home cleaning business is labor. The rest is marketing, software, infrastructure, stuff like that. But between the cost of goods sold labor and the administrative labor, somewhere around like 60% of our expenses are labor. So when we're running a home cleaning business, labor going up has a super drastic impact. There's not a way around that, right? Like we have to pay people what it takes to be competitive. And we're competing with Amazon warehouses and what the fast food joints are paying, which now like on all the windows by all the places we operate is $15 an hour. And every machine shop, anybody with a blue collar job, our employee, that's the substitute for our employees. They can go work at any of these places because we're not using highly skilled labor. So they have a lot of substitutions, and those substitutions went from paying below $15 an hour to now pushing $20 an hour or more in a lot of places. The simple math says we have to pay that. Our business doesn't exist without employees. So we had to pay what the market costs. And in turn, so do our clients, right? We have to pass that through because we're running a 10% net profit margin business. We can't absorb that sort of price increase. So if our cost goes up 20%, so too does our price. I know we just did a 15% price increase a couple months ago in all of our home cleaning businesses. And I don't know if it was quite enough. We might have to do another one next year. We'll kind of see what wages keep doing. We haven't had a big issue with our supply spend getting out of line, like cleaning chemicals and stuff like that is a little bit high, but it's not out of our business model. Our marketing costs haven't gone up so much, and we spend quite a bit on marketing. Our liability insurance is getting a little bit more expensive, but it's not unruly. It's really the labor that's crushing us.
Sure.
But so I'll say, if labor goes up, your costs just have to go up. And if you're going to lose clients because of it, that's just fine. If they're not willing to pay for what it costs to have somebody clean their home, they're opting out. But more and more, we know that the demand is there, right? Like demand for home cleaning is at an all-time high. And there's going to be a recession at some point here, and demand's going to come down because we're a luxury, not a necessity. But we're getting closer to being a necessity. Younger generations
I think in the minds of some, it's as much of a necessity as a lot of other things, though. Consumers will give up a lot of other discretionary expenses before giving up their house cleaning.
And I think more and more and more that's the case. With younger and younger and younger generations, like they're way more like my folks will not outsource a thing. They're finally starting to come around. They're in their mid to late 60s, and they're starting to come around with the idea of outsourcing stuff. But I mean, like, they're not short on the money to do it, but they'll be damned if they would hire somebody to mow their lawn, right? They will drive an hour back from having fun somewhere to make sure they can get back and beat the weather to mow the lawn rather than hiring somebody to mow their lawn. But I don't see that out of the younger generations that are just starting to buy homes now. It's like a built-in cost of owning a home is paying somebody to clean it. Not for everybody, but that demand has been continually increasing. So even if we get a recession, people are still going to get their homes cleaned. Maybe we lose a little bit, but I don't see the demand going away. It's just going to be who's willing to pay the higher cost for the labor. We're their labor source. They're hiring our company to find them good cleaners and train them good cleaners. And so we're just the middleman. We're just like, whether we use employees or subcontractors, doesn't really matter. We're the middleman to make that experience of finding labor to clean your home pleasant and to hold that home cleaner accountable and make sure that the job gets done correctly. And, insurance and all that stuff. So I do think, even though the demand is there, the labor is going to be more expensive, and it's just going to be a matter of matching capacity and demand. Is how do you make sure you're paying the employees enough and your customers are paying you enough so you can keep being the middleman?
I mean, one of the hottest topics in the industry, and we touched upon this already, is, how do we find labor? A lot of discussion about that in Vegas last week. And for good reason, that needs to be a high priority, and we need to be doing everything that we reasonably can to do that. But the other side of the equation is just economics. If there's more demand than there is supply, then you're not charging enough. So one of the ways that we fix this problem of, I can't find enough labor is charge more. And a few customers will say, I really can't afford that, but that's fine, because the others who take it are going to be paying you more, and you can make more money and clean fewer homes doing it.
Yep. Yeah. We tend to get, as business owners, we get handcuffed by employees that need stuff from us and customers that need stuff from us. And sometimes we lose sight that it's our job to run a profitable business and that our families require that of us. It's easy to let the influence of customers that are maybe not thrilled about a price increase, or employees that are not thrilled that they got to go back and do this redo or whatever the case is. But at the end of the day, it's just a math, like we're just running a big math problem. So like your point,
part of some of the work that we do, like in Made Central, we emphasize the point that your families need you to make a profit. I mean, you need to build value in your business. But at the end of the day, your clients really need you to make a profit, and your employees need you to make a profit, because if you're not making a profit, you're going to provide lousy service, and you're going to be a lousy place to work. That nobody wins if you aren't being profitable.
Yep. Yeah. I think you nailed it. One other part of the that capacity and demand challenge that everybody's facing, the people that I see overcome it the fastest and easiest, where like when prices are really going up, especially labor, are those that pay commission instead of hourly. Because when you raise prices, your employees get a raise at the exact same time. And so if the employees need to make more, one is it's in their control. If they need more money and they're working hourly, they can't control how much money they make because they like the only way would be to drag the clock out, right? But if they're making commission, they can hustle their asses up and maybe get another house on their schedule and make more money. So they have control over how much money they make to some extent. They don't have control over the commission rate per se, and they don't have control over how many new homes you're selling and how many clients are on their route all the time. But commission style pay tends to help business owners like incentivize their employees the right way, so the employee has some control over how much money they make, and the employee can give themselves a raise just by working more efficiently. Whereas hourly, they actually give themselves a pay decrease if they work more efficiently. And then when you're looking at how much your cleaners are making on average, you say like, man, our cleaners need to make a little bit more money. They're working hard. They're efficient. We know they're efficient because of the way their paychecks work. Let's do a 10% price increase, because then our cleaners automatically get a 10% pay raise as well. And so you don't have to try to manage two different things. Your labor and your pricing is directly connected. And so you only need to do one thing to pass that cost along. It's simply just raising prices. And you might even do it when we just did our 15% price increase. We first did it with brand new clients for a month or two to see how well it was absorbed. And it like this happens every time. And so I shouldn't be surprised. Maybe I'm like surprised how not surprising it is anymore. If that makes any sense. Whenever we do a price increase, it's like you get two, Karens that complain about it. But other than that, everybody's like, yep, I get it. Sounds good. Especially with new clients, because they don't have a basis, right? When you change the price to somebody that's been getting cleaned for 6 years at the same price, they're usually pissed. And they're pissed because you should have given the price increase a long time ago. You view it as you did him a favor. Like, man, I should have increased your price.
And they come back and say, you haven't raised my prices in 6 years. Why are you doing this now? And it's like, you're complaining about that?
I was going to say, you're welcome. You want me to retroactively recoup all the price increases I should have given you? Like you're missing the point. I've given you a discount for the last 5 years. So yeah, now is a good time to do a price increase. But man, it's like, yeah, we lost a few customers when we did that 15% price increase, but then they went out and shopped around and realized nobody else had any labor either. And so now they're coming back because they still don't want to clean their own house. And they just had to reckon with the fact that it's 15% more expensive to get your house clean now. And that's just the way it is.
At the moment, I think consumers are kind of programmed that prices are going up because they're seeing it at the grocery store, they're seeing it at the gas pump, they're hearing about it, in the news. So, you don't have to do a lot of explaining to your customers to why you're raising your rates. They know that. Yep.
It's going around. And if you think about how much money was pumped into the society, even with like our PPP loans that many of us took, that money doesn't not have an impact. Like the only thing that happens, it doesn't, I'm super thankful for it. It totally helps some of our businesses stay afloat. But it doesn't change anybody's, like position in society, if you will. Like nobody's better off than they were before relative to everybody else. It just the water level goes up. So when money is injected like that, all that happens is prices have to go up to like keep an equilibrium. So it takes a little bit of time, but what we're seeing is the obvious end result of a whole bunch of money stashed into a system, which just means people are going to spend more, which means prices are going to go up because the labor's not there and the businesses have to pay. So it's exactly what we would expect to see. It's just if you're, reluctant to change, or that one customer that's going to complain about an obvious coming price increase is going to cause you to like lose sleep, you're going to have a hard time coping with it. But back to the, like, if you just treat it like a math problem of what does it cost me to get the labor that I need to do the job we need to do, then there, if it's 20% more than I'm paying today, 20% price increase. And it's as simple as that.
And, you started the discussion about your days with Cargill, and your job was basically, kind of playing the commodities and helping companies hedge, keeping the cost of that bean burrito below $1, I guess, or at $1 at McDonald's that your successor kind of dropped the ball on.
He did fine. It was a market dynamic, but the timing of it, the timing of it was still true.
I have some similar stories, but we won't go there. Anyway, the point is, it's about getting predictable outcomes, and it's never easy to get predictable outcomes, but it was easier getting them in like 2019, 2018, 2017 than what it's going to be 2021, 2022. It's a lot of things that are changing really fast, and the work that you're doing, and just the whole idea of having the right accounting systems in place and the right data pretty much on a real-time basis. Just because you didn't have it in the past doesn't mean that you're not going to need it now and in the future.
Yeah, and one of the trends I'm seeing kind of across all the home services is the desire to scale. It used to be a lot of, single owner operators with maybe a helper, and that was a way to make a living. And now there's just like there's this trend of much greater demand as more and more business, or more and more homeowners want to outsource stuff. There's also this trend of more and more small business owners don't want to be small. They see somebody scaling, they want to scale too, and so they scale, but they try to scale using the tools that got them to be $100,000 company with them and some help. And now they want to be $1 million company, and they're used to running their business out of their bank account, which works totally fine. I get asked all the time, like, when's the right time to hire a bookkeeper? When should I use you, Dan? And I honestly tell them, like, right when you're making like $100,000 and you have to start hiring people to help you when you scale, because up until that point, you can generally run your business from your bank account. You're already seeing all the things and you're in the day-to-day. You can make the decisions you need to make pretty well with your gut. The minute you start hiring other people to go out and do the work, which, by the way, is super, super expensive. And usually what I see happen, not usually, what happens when people fail to scale is they fail to understand how expensive it is to scale, both in terms of the marketing investment and the labor investment, because they're used to getting paid to go clean. And the minute they're off the truck, so to speak, and they're not the one out cleaning and generating a paycheck for themselves, in home cleaning, it takes 2, 3, 4 people to go out and clean to make you enough money to replace what you got paid when you were out cleaning. After that, like, then it starts, scaling and making more money. But when you first hire 1, 2 people, it costs you more because you're paying them to go out and clean. You got to go out and sell, but you got to sell a whole lot of stuff just to replace your income from when you were cleaning. So I think that's the big thing is more and more people want to scale, but they're trying to scale using their bank account and maybe paper schedules or something like that. And they're not on a CRM like Made Central yet. Maybe they don't have the bookkeeping yet. But once you start hitting that $100,000 level and you start hiring multiple people, and now you're thinking about, maybe do I hire an office manager next or whatever, all of a sudden those 5 buckets of expenses come in really handy to figure out who to hire next. How much should I pay him? If I hire an office person, where does our revenue need to be to like stay in line? Like, what does in line mean? And so it starts to get way more useful as you scale to have the bookkeeping done efficiently.
If you have the data, I guess you can put together a forecast. You can put together a plan, a budget, and if you understand how the numbers work together, you can actually see how you might be less profitable. Sometimes from a strategic standpoint, if you want to grow, you give up profit in the name of growth, realizing you're going to be a lot more profitable once you kind of get to the other side. But you need a plan.
You're taking care of future Tom at some point. Like, current Tom can forego some money, spend it on marketing investments.
We'll eat ramen noodles for a while, but we're going to be doing quite nice down the road.
That's right. I feel like that's the the name of the game is you can take money now, but you're only sacrificing money later. If you take the money now as profit, you're taking it, you're 10x taking it out of your future pocket. And sometimes you got to do that because you need the money to live and whatever the case is now. But you got to understand, like, this is your stock market. Your business, and especially your marketing, is your investment. That's your stock market. So if you take the money instead of investing it in your business, you're not going to get the return that the stock market would provide. And 10 years from now, you're going to be running the same business instead of a business 10 times the size and 10 times as profitable.
For a lot of us, if you're, a small business, unless you've been at it for a long time and have accumulated a lot of wealth, your biggest investment is your business. And you really need to think of it as that, and do the things that you need to do to grow its value, not just necessarily try to pull every dollar out of it that you can.
Yep. I have a lot of conversations, especially this time of year, and especially with my pressure washing guys. It's the pressure washing guys that are the ultimate like toy heads. They just want to talk, gallons per minute and PSI this and PSI that, and whatever the case is. They all want their equipment toys. Home cleaning, we don't have as bad of a problem with toys because we don't have the same level of capital investment. But nonetheless, I tell everybody, the two investments that are by far the most important in our businesses, and this is like extreme for home cleaning, the two most important investments we make are in recruiting and in marketing, because we are just capacity and demand businesses. We need to grow capacity and demand as fast and efficiently as possible, at the same rate. Because if our demand grows, if we're marketing too hard and we don't have the capacity to fulfill it, or if people quit, our life sucks. So we have to make sure we have the capacity, and it's got to be trained up, and it's got to be efficient and timely and considerate, and, be doing a good job in the field. But likewise, if our capacity is too high and our demand is not there, then our capacity is pissed off because their paycheck is small and they don't have enough, houses on their route or whatever the case is. So it's like this never ending battle of capacity and demand. And those are the two things that we always need to be investing in. We don't need the best vacuums in the world. We don't need the best mops in the world. The person running it is like, if they're good, they'll make it work. If they're not good, it doesn't matter what piece of equipment you put in their hands, they're just going to do a shitty job. Yeah, as you scale your business, it's nice to have nice things. But every time I have a business owner that's like, I want to buy these, I want to buy those. And I'm just like, you're not buying it for you. You're buying it for a 20-year-old kid. So if it's you and you're buying yourself a vehicle, or you're buying yourself a vacuum or a pressure washer or whatever it is, maybe you would buy something nice, but you're buying this for a 20-year-old kid who you just met. What really is the investment? The investment is go find more 20-year-old kids in case this one doesn't work out. You're going to find some really good ones, and they're going to stick around, and you want to spend money on employee engagement and find the A players and keep them. And then you want to find great customers and send your A players out there to keep them. But the vacuum doesn't matter. The mop doesn't matter. It's the recruiting and the marketing that matters. Those are what make you the money.
Yeah, that's been the case forever, I guess. Seeing some things happening, over the years, though. I mean, technology is evolving, and 10 years ago, technology was like running QuickBooks Desktop, maybe, and some other type of program that you used a floppy disk to, load to your local computer. But with smartphones and the ability to do more detailed work measurement, I'd like your opinion on going beyond a sales-based model where it's about getting leads and getting a bunch of people and cleaning a bunch of homes, versus a profit-based model where you're doing those things, but you're also managing your cost of goods sold, you're managing your back room expenses, you're the whole, making sure that your pricing is right. Where 10 years ago, success was how many homes are you cleaning and how much revenue you're generating. I think we're in a world now where success needs to be how much profit are you making.
Yeah, I see a transition happening, but nobody's at the point where they're like, my profit is this. And usually if they talk profit margin, they're wrong. They don't know what it is. So they say it wrong. They think they've got it right. But I've seen people like, my profit margin is 40%. I'm just like, but it's not. Like, it's like, it actually can't be. Maybe you're not, like, because you're not paying yourself, or, something like that, or
you're doing something illegal or something.
Yeah. Or you're spending zero on marketing and you're the one out cleaning everything like that. Like you're not true to what you're saying, but I think it's just because you don't understand like exactly what you're saying it is. But most people are still like, here's my revenue. Cost be damned. This is how much we did. This is how much we made, which I always think is funny. It's like, how much did you make? Oh, like $1 million. It's like, but did you actually make $1 million or did you just generate $1 million? And then how much did you actually get to keep? We're in debt up to our eyeballs, So I think you're right, Tom. I think people are starting to see what actually pays the bills. To that point, I always like to make the point to people, when you save money on expenses, you get to keep all of it. So let's say you change the supplies that you buy or whatever, and you save 1%. I don't know, just for example, and you're doing $10,000 a month, so 1% is $100. You saved $100 a month. $100 a month is $1,200 a year. That's right back to your pocket. Like you did one little thing, you saved $1,200. Like $1,200 is real money. And this is obviously a smaller business I'd be talking about. Now, to replace that $1,200 that you just made, that went right back in your pocket, in a business model where we generate a 10% net profit margin, you would have to sell $12,000 of new revenue to make the same $1,200. So revenue's neat and it's fun, but it puts money in your pocket a hell of a lot slower than saving money does. If you can cut some expenses and get your business model in line, you get to keep all of it. If you grow revenue, you get to keep 10% of it. You got to do both, right? If you're going to scale, and if future Tom's going to be sitting on a beach somewhere, current Tom's got to scale the business a little bit. And so revenue's got to grow. But if you can do it profitably, if you can do it profitably, you can scale it faster because you're making more money that you can reinvest in the business. But B, like I said, if you can save on those expenses, it all comes back in your pocket. You can be on a beach a hell of a lot faster. You'll be sitting on money that you might even choose to invest in somebody else's business instead of your own, right? Like when you make money, you can go put it in the stock market. You can go, IRA it or 401k it, or put it in an HSA health insurance plan or whole life insurance, like for retirement vehicles, or you can spend it on your marketing, or you can invest in somebody else's business. Where Mike, who I talked about earlier, he and I are talking just today about investment in somebody else's business that we want to make. So at some point, if you're making enough money, you run out of investments to make in your own business, and you start looking at other people that need help and maybe investing in their business. So there's fun to be had.
Yeah. At some point you're making money, and then you got a whole nother, I don't want to call it problems. I mean, it's a good problem to have, but what are you going to do with the money that you're making? Right.
Mm-hmm. Yeah. Invest in your own business until you can't anymore. And then you got to go find somebody else's business to invest in.
But, the overarching point is that we've got a whole nother set of tools and services, and the service that you provide, Dan, is part of this, that we don't just have to manage our businesses based on sales and how many homes we're cleaning. We can actually start doing a lot more to manage our businesses to drive profit. And like you said, if you look at your expenses as a percent of revenue, every percent, you lower any expense. You have $1 million business and you lower it 1%. That's an extra $10,000 on the bottom line in your pocket that you didn't have before. And that's not hard to do if you've got the right tools in place.
Yep. Yeah, we do an activity every year where we do a P&L detail report in QuickBooks, where we basically look at different segments of our P&L and try to find those expenses. I don't want this to sound like a kick on you, Tom, but software tends to be a place where people sign up for things and forget they're paying for it. So software is a good one to look at and see what you're paying for. If it's made sense,
if you're not using it, you're wasting your money.
Yep. Yep. And so I see software, dues and subscriptions, a lot of stuff like lands in and just hangs out. And there's always some marketing stuff that people are signed up for or paying, and it's getting no acquisition costs, and they're just not measuring it. So doing a P&L detail report like that to try to find, $100 here, $100 there. Like I said, it might seem piddly to save $50 a month on something, but if you go save $50 a month on something, that's $600 for the year. That's the same as selling $6,000 worth. That's like selling the best weekly client you've got. So go save $50 a month. Like, it is equivalent to selling a lights out, massive weekly customer. So
the idea is to make investments in stuff that's going to make you more money. Back to your software analogy, the flip side of it, though, is there's some people who want to buy software based on price, and it's not really about what things cost you. It's about how much money are you going to make with it. Doesn't always mean that you want to spend, buy the most expensive either, but you want to be looking at your investments or anything that you spend in terms of, I'm putting this much cash out, but this is how much cash I have coming back to me.
Yep. Yeah, it's an investment. It's not an expense. So there's got to be a return on it. I try to, that kind of goes back to like the 10X when you're spending money. Similar to if you save money, it's the same as making 10 times that amount of revenue. If you're going to spend money, that spend needs to get you 10X in revenue to pay for itself. So when you look at Made Central, how much more revenue do you need to generate to make that investment make sense? When you look at going to ISSA or ARCSI and you got the travel and the meals and whatever, how much do you need to grow your business and revenue to cover that expense? What do you need to gain from there that's going to help you scale your business? And so I think if you look at all of your expenses as investments that need to generate a return, and in our business need to basically generate 10 times the amount of revenue as what you paid, it starts framing things up as to what you expect to get out of something instead of just spending money because I think I need this thing. You got to think through what it's actually going to do and how much productivity it's going to increase and revenue it's going to generate so that you can, make it work, make it last.
Well, Dan, we're quickly approaching the top of the hour here, but I want to make sure that everybody knows how to get a hold of you if they want to know more about the services that you guys provide. This is your website. I dropped the
website
URL into chat. Any other I guess ways that you would like people to reach out to you if they want to know more about your services?
Well, for sure, hit the website there, and I apologize that it looks like a 1980s website. It's being refreshed as we speak, actually. But up at the top, there's the target budget tabs. It's all free stuff. I think because I made them, I have a hard time valuing them. I have been told by multiple other people there's probably $1,000 to $2,000 value for that target budget sheet. You basically put in your sales expectations by month, and it builds out the budget by expense line of how much you should spend on every single line item of your P&L, and it rolls it into those 5 categories of decision making that we talked about. So it literally, you put in 12 sales targets, one each month, and it will build out your budget for you. And you can override the percentages with what you think you'll spend, either from a percentage standpoint or from a dollar amount standpoint. There's a tab for payroll, and you can put in hourly or commission-based pay. There's a tab for marketing expenses, and you can put in acquisition costs. You don't have to get that nerdy on it. It can work with you putting in a sales forecast, or you can go super deep in your marketing acquisition costs and stuff like that. And it's free. I built it for everybody because I kept having people ask me hey, how do I budget for all this stuff? And I was like, well, I already know how much you should spend on everything. So let me just build it for you all. So that's free. Go download it, go get it. There's also a chart of accounts in there under the new free budget templates. There's the chart of accounts that we use, and you can download that chart of accounts into an Excel spreadsheet and upload it right into your QuickBooks. You have to merge your stuff into it, but then you have the exact design that rolls into that budget sheet. And it has the 5 groupings of expenses. So you don't need to look at 40 line items. You can look at the 5.
And this would give you a chart of accounts that actually helps you manage your business as opposed to the thing that your CPA gives you, which is just for paying your taxes.
Yep. Yep. So whether you like me or not, whether you like bookkeeping or not, get those things for free. And if you're like, that's cool, Dan, but I'll put these in, but I don't really want to do my own bookkeeping, then, fill out the form on our website there and say, hey, I'm interested in you guys doing some bookkeeping for me, and we'll do a demo. I'll kind of show you behind the scenes of what we do. And then show you the pricing, and you can decide.
And it's hard to imagine, but there's some people that actually don't want to do their own bookkeeping.
I'd say I have found 2 people that liked to do their own bookkeeping, and we have a couple hundred clients, 2 that like to do their own bookkeeping, and only 1 that actually was doing it right. Because it's like there's just a little bit you got to know. Not saying don't give it a try if you're into that sort of thing, but if you're not an accountant, maybe don't do your own books. And if you're not like, yay, bookkeeping, then let people like us do it for you. Our pricing starts at $150 a month to do the bookkeeping. And like I said, because we do it as a finance activity, I like to think the value in the data you get to help you make decisions should easily pay for your bookkeeping. It should be an investment and not an expense. It should always pay for itself over and over and over again.
Yeah. If you don't have more money in the bank at the end of the month than what you would have if you weren't paying for it, you shouldn't be paying for it.
Exactly. So,
but what you guys are doing, I think, is certainly a service to the industry, because everybody needs to be managing their businesses based on, real timely financial statements to, break the cost out in a way where you can actually make, intelligent decisions, make smart business moves with them.
Smart business moves is what it's all about.
So, Dan, thank you for being with us today. Thanks for sharing some awesome information. Today's Monday, Thanksgiving's Thursday. We're not going to be here Wednesday. We're going to kind of be getting ready for the whole Thanksgiving thing. We'll be back next Monday. Okay. So we'll see you 5:00 Eastern next Monday. Till then, take care. Thanks again, Dan.
You bet. Thanks, Tom. See you guys.